Hi, and welcome to Ask Allan. Today we're going to be talking about mortgages. And the reason for this is simply I've been talking to a lot of clients recently and they're really concerned about where rates are going and also a lot of rumors, I guess, around what CMHC is doing and their new guidelines for getting mortgages. A big part of the new CMHC guidelines has to do with investors, and we'll talk more about that at a later time. Today I want to talk more about how these new changes are going to affect you, the average home buyer. They have what's called a new benchmark rate that you have to be pre-approved for. And this affects you if you're looking at taking out either anything less than a 5-year term or if you're looking to go on a variable rate product. And so this means that even though you may have been pre-approved before at the lowest interest rate, which is 1.75, now you have to be pre-qualified at 6.25. The other thing that people really need to be aware of is how banks are doing their pre-qualification process. What we're seeing is people going into the banks ask them how much they make, how much they owe, and they say, well, based on how much you make and how much debt load you have, you can afford a mortgage of this amount. The problem with this, though, is the bank has not verified their credit rating, or have they verified any supporting documents as far as looking at their T4s or how much money they owe. And so these clients will go out there into the market, put an offer in on a place, usually without a financing condition, because in a lot of cases it's very hard to put offers in with financing conditions and have your offer accepted in today's market. So they put an offer in without a financing condition, thinking that they're going to get the mortgage from the bank that they're already pre-approved for, but then when they go back to the bank says, well, we need to pull a credit bureau. And when they pull that credit bureau, they find out that the client has bad credit and can't get the mortgage, or what they told them for income and what they actually make for income is a totally different scenario. So now the client gets stuck in the fact that they can't buy the house, and they put themselves at risk of not only losing their deposit, but also being sued by the seller. So check with your bank, check with your mortgage broker, make sure that they're doing a proper job in the pre-qualification process, make sure that you're pre-approved at the new benchmark rate, because you may think you're pre-approved for a certain amount, but now with these new regulations, you may not be anymore. And most importantly, make sure you're getting a great interest rate out there. Today's best rate on a variable is 1.75, and the best rate on a 5-year is 4.39. This comes directly from my wife, Melissa Asplin, at Castle Mortgage. And if you want more information on this or any other real estate related article, go to itvwinnipeg.com and click on the link Ask Allan.